So guys, the last chapter of the liquidity, and we're gonna talk about the inducements. Inducement is basically the liquidity, but in the smaller time frame, and I am using it to enter the trades. We saw the huge candles, the 1 hour time frame, and we saw the wicks, we saw what happened, and after that the price went parabolic. Yeah, it makes sense, everything makes sense, but with the inducements, you analyzing, for example, in my case, you're analyzing a 1 minute time frame. You're getting the brackets, the sell side liquidity, the buy side liquidity from the big time frame. But if you're looking for the inducement from the exact price where the institutions are getting into the market, you need the inducement. You need to understand why is it happening, and inducement is basically the start of the institutions of getting into the market. So now let's get into the charts, and I see a nice example. Yeah guys, so we have a sell side liquidity in this case. Yeah, the price bounce. We have a nice support zone. There was some bounces here, there was some bounces here, and here was our liquidity grab. But in the same time, if we go to the lower time frame, yeah, we can try to, for example, 5 minutes. Bam. Here we have inducement. This candle, this one candle, it doesn't provide us much, but it provided us that. Look, the candle. Yeah, I'm going tuck. We have a candle, and the price was, moving. Not much. We have a little bit of the volume, also not much. And what happened here? Inducement happened. The liquidity grab happened. The price went down and starts booming up. So basically from the lowest point, which was, let me check, which was 57k 830, something like that, it went parabolic to almost, what, 59k? So 1.3k was added to the Bitcoin in short amount of time. It was 1, 2, 3, 4, 5, 6, 7 candles, so 30 minutes, something like that. If we go deeper, which is 1 minute time frame, we're gonna reset the chart, and we need to find that episode in this. You see, 1 minute time frame, it's market movement. You can find the exact moments. You can try to draw lower highs, lower lows, apply the market structure, everything in the 1 minute time frame, but the confirmation is not that powerful. But you can find it. Look at this. Look at this. This is what's important for us. It was the inducement because the price went below, took out the liquidity. You remember I told you, institutions betting against themselves to get into the market with a huge amount of money. Price was pushed down. Look at the candles. All red candles going down. In this particular position, yeah, there was a huge candle down. After that, the institution starts buying. After the inducement, the price went fucking up. This is the inducement. And when you see something like that, you see like the price went down from his position here and starts going up, creating small change of character, creating a small fair value gap, which we're gonna talk about, and it respected that. Yeah, it was green, it was red candle, and then bam green candles. We can enter the position, and those kind of the positions, they're gonna be small. In my case scenario, I would put stop loss right here. It's $200, and target, for example, 1 to 3 risk reward. Take out half of my volume. The other half of the volume, yeah, we had the inducement, we have a liquidity grab. So what do we expect? We expect that institutions are gonna continue to feed market with a lot of volume and the price going up. So the next trade could be for the top. So we open the bigger time frame and looking where is another top, where is the buy side liquidity in this case scenario. Yeah, and we can see the buy side liquidity, as we talked before, is above this wicks. So if we want to be careful, we're gonna be targeting below it. Yeah, we're gonna target it here, and still we have basically 1 to 12 risk reward trade. This is amazing. And the trade, look, the stop loss was so small, the take profit is huge. But if you're targeting normally, if you're targeting for the buy side liquidity, which is gonna be on this side. So we have almost 1 to 15 risk reward. This is a huge amount of money. Even if you're risking 1,000 per trade, for example, I'm doing that, but I'm day trading. I took half of my volume with 1 to 3 risk reward, yeah? So I made 1,500. And other 1,500 I left into this trade is 1 to 15 risk reward, so times 15, and we're getting what? 500 times 15, we're getting 7,500. That's a bunch of money. So from this trade, from this particular trade, like here, with the inducement, we have a small amount of stop loss and we have a huge take profit. Those kind of trades are not often. You have to wait for it, you have to apply the information, be patient with it, because the market manipulating a lot, and if you can see the manipulations like that, you can have an amazing trade. And if you have an amazing trade, you can make fucking amazing ton of money. In this case, 75 plus this from the half of the volume, you have a 9k profit. Just with the one trade, if you understand the market. And now imagine how much you have to work if you want to make 9,000 bucks, so it's like 8,000 euros in Europe if you just work it. So what, 3 months, 2 months, maybe if you have a better job, maybe a month, but still just with the one trade. And this trade, what, in basically 20 hours, you have 1 to 3, you take out half of the volume, you put your stop loss on break even, this is what I'm doing, and just leave the trade. Because I know the strategy is good, I don't need to track every tick of it, I don't need to, oh, it went down a little bit, what the fuck, what I'm supposed to do, maybe I need to close. No, you close the volume, you have the plan, this is what is about the strategy, this is about the psychology, this is what I'm gonna teach you in the fucking academy. That's why I'm telling you to join, that's why it's important. And trades like this, it's fucking amazing, believe me, it's fucking amazing. So, thank you guys for watching. I hope the liquidity column was informative and it was good for you to understand, but I can tell you everything, but if you do not put work, if you do not try yourself, if you do not open the fucking trading view, you're not gonna make it. Open it every time, check it, check on the higher time frame, check the buy side liquidity, check the sell side liquidity, check the fucking inducements, check double tops, double bottoms, and look how market is hunting the stop losses, taking the liquidity so they can get into the market. You get that? So yeah guys, thank you for watching and see you in the next episode, in the next column.